April 2023, question 4C. So April 2023, question 4C. Zahari Processors Limited, page 15. Now, when somebody asks you, like question 4A, you're being asked to distinguish between a single tax system and a multiple tax system. Tunapata story ya kupiga hapo. Single si ni moja na multiple ni mingi. Na hiyo ndo maana yake. Sasa, so a single tax system is where the country only has one system, that is one approach of collection of taxes. A single approach, only one system, one approach of tax collection. Multiple tax system is where you have different options available to the government for collecting of taxes. Vile tu imejieleza, hizi mambo ni direct interpretation. Single na multiple. Single ni moja, multiple ni mingi. Single tax system moja peke yake ya collect taxes. Multiple tax system, many systems, so many approaches of tax collection. Na unapata 4 marks. Alafu anakuja na kuuliza, in a tax seminar, one of the facilitators noted that tax evasion has remained a major challenge for revenue authorities in most developing countries in efforts to achieve revenue collection targets. Tax evasion. Have you ever heard of tax evasion? Tunapanga na tax mbili. Moja inaitwa tax evasion, nyingine inaitwa tax avoidance. Then illegal. Avoidance is legal, and evasion is what? Is illegal. Na ndio ukaulizwa, with reference to the above statement, propose 4 measures that could be applied to curb tax evasion. What can the government do to reduce the chances of tax evasion? There are many measures that the government can apply. Educating the taxpayers on the importance of tax payments, so simply education. You can even impose huge penalties. Make the cost of tax evading be very high to our corporate events. So imposing heavy penalties. Proper utilization of taxes. Wakati gavana utilize the taxes zetu vizuri, tutakuwa na shida hapo event. Ndio, tutalipa kwa amani. Right? We can even talk about hiring of competent or qualified revenue personnel. White House staff wakielewa wawe qualified. Sasa tunapeleka kitu yote huko. Aidha hata deal na kesi yoyote yenye inakuja before him. We can even talk about use of technology. Kwenda kwa iTax na kuleta hizi the new technology, the EFI, really going to reduce the cases of tax evasion. Now let's have part C. Where we are told that Zahari Processors Limited presented the following statement of profit or loss for the year 2022. Turnover is sales. Cost of sales ni biashara. That's an expense for the business, and they compare the gross profit. Other income, provision for foreign exchange gain. Is it taxable? The only provision that is taxable is which one? Provision for specific budgets. This one specific budget. hizi specific bad debts ndio. Kwa hivyo ni kelele ina taxable kutoka kwa biashara. Then we have gain on sale of motor vehicle. Is it taxable? We are not in the business of buying and selling motor vehicles. But you talk about biashara in a taxable release of liability. We need to know what it is. Release of liability kwa lugha nyingine ni sawa na kusema discount received. Wamekupunguzia deni, sinamaanisha wamekupa discount. So nataka kujua ni discount received on what. Kama wako silent inakuwa taxable na kuwa sawa. Refund of excise duty is taxable. Tax can never be taxed. Excise duty is taxed. Yeah, so we cannot tax. So hiyo kutoka kwa biashara ni non-taxable. Investment income. We need to know what investment income it is. Dividends of interest and from where. So that we do it. Come and qualify, extend and qualify. We list the expenses. Purchase of trademark, is it allowable? Trademark is fixed asset. It is allowable. Design of company website. Allowable, is allowable. It's allowable. Website is a fixed asset. Shall give it the capital allowance for the software. Director's fees, is it allowable? Director's fees, what do you think? Is it an expense that is genuine? Yes, it is. Then it's how salary income only. Donations to charitable institutions, are they allowable? Yes, they are. Depreciation expense, is it allowable? It's allowable. Marketing expenses, are they allowable? Marketing is allowable. Management and professional fees, is it allowable? So marketing and professional is allowable. Clear. That one is allowable. General expenses, are they allowable? Yes, they are. Then we have legal costs, are they allowable? We can say subject to confirmation for legal costs. Loan repayment, is it allowable? Loan repayment is not allowable. Clear. We're in April 2023 question 4. What is allowed on loan is the interest on loan, not the cost of paying the loan. Allowance for doubtful debts. Allowable if what? If specific. Impairment loss of property. Impairment loss inakuwa disallowable, ndio. Impairment is one depreciation ama amortization. We don't know what it is, we only know capital allowances. Now, on 1st April 2022, the company acquired the following assets. Factory building, we give it capital allowance at the rate of, I think 50%. Manufacturing building, still. Warehouse, give it at the rate of IBD at the rate of IBD is 10%. Processing machinery, ID or IBD? ID. Na ID mwaka wa kwanza ni 50%. Lowering of cotton. At the rate of, I think 25% for the lorry. Drainage system. Drainage system, ID or IBD? ID. Rates ni 50% mwaka wa kwanza. Saloon car. WTA, ndio. At the rate of 25%. What is the qualifying cost? 3 million. So now it costs 4.84. So the maximum we can claim is 3 million. Management and professional fees comprised development of a strategic plan. The plan, strategic plan iko sawa. Tax consultancy fee. Is it allowable? Haya ina subjects. Our professional fee hatuwezi kosa kuallow, tunafaa tujue hivyo. Sisi ni watu wa tax. Our consultancy fee, hiyo lazima tu allow. It is the only word that has, it is the only term that has the word tax in it, and it is tax, and it is allowable. Hiyo nilisema. Na tena leo nimerudia. The only term that has the word tax in it, and it is allowable, is tax consultancy fee. Hiyo peke yake. Audit fees, is it allowable? Environmental assessment fees, very much in order. General expenses included installation of new sign. Is allowable giving WTA at the rate of, I think, 10%. It is not office electronic, and it is not a motor vehicle. So inamaanisha I qualify for 25%. The alternative is 10%. Car grant to a director is allowable. Installation of processing machine is allowable. Na hiyo cost tupeleke kwa processing machine. Installation cost in number part of the total cost. Staff placement party. Kwa sawa, sindio? Hiyo ni allowable. Hiyo inaitwa staff motivation. The bonding of the staff is very important. Retrenchment costs. Lazima pia tusidite, sindio? Legal fees comprised defense against claim of breach of trade agreements. Allowable if successful. Thank you. Renewal of Kenyan Association of Manufacturers membership. Allowable. Your manufacturing company, we are incurring some cost to renew our membership fee. That is okay. It's done annually, right? Probably something like that. Negotiating a bank loan. So now what is allowed for the bank loan is the interest on loans. Interest on loan. Preparation of employment contracts. Contracts are fully allowable. Preparing and renewal of employment contracts, lease agreement of up to 99 years, tender documents. Yeah. So meaning nimejibu hata ya mwisho. When drafting lease agreement inakuwa nini? Allowable. Release of liability was in respect of a loan obtained from one director who decided to write off the loan as it was due for over 4 years. Will it be taxable? Sasa hapo imaribu. We should not get loans from our directors. Because when you allow data from the tax point of view, we are encouraging to steal from KRA. The director can give you a loan at any interest depending on what they want. Loan should come from the financial institution. So here inakuwa kelele. So compute the taxable profit or loss for the Hari process as limited for the year ended at 1st December 2022. Now, in such kind of a question, examiner hajakuuliza ku calculate capital allowances. Ametaka tu calculate the taxable profits. Don't waste a lot of time calculating the capital allowances. Tunazifanya mara moja. We try as much as possible to minimize the time that we spend in a question. Like now in that case, let me this. We go direct. Tumeambiwa wanajiita nani? Bahari Processors Limited. So we have Bahari Processors Limited. Bahari Processors Limited, 2022. Taxable income computation. So examiner does not need separate workings for capital allowances. Yanataka tumtafutie the taxable income. So capital allowances still not direct maswali. Because they don't need to waste a lot of time. So the figures are in thousands of shillings. So the normal way, we have the reported net profit. The reported net profit of 527, 614. 527, 614. Then we add back. It's allowable, right? It's allowable expenses. We add back disallowable expenses. Note number 1, the company acquired the foreign assets. Hakuna mahali wametuambia kwa income statement pale juu. So hapo let's look at capital allowances. The information in note number 1 has not affected our profit. It's not part of the income statement here. Note number 2 has affected us. Management and professional fees comprised. Development of a strategic plan, that is okay. Tax consultancy is okay. Audit fees is okay. Environmental assessment fees is okay. So for hatuna shida. We don't have an issue with anything there. Clear. Note number 3, general expenses. Can we add back installation of new sign? So add back installation of new sign. At a cost of how much? 820. Number 2 zote ziko sawa. They are all allowable expenses. And they have been deducted, so we're okay with it. Sasa, hakuna ile kuna shida nayo. Okay? Can we add back car grants? Car grant to director. Amounting to how much? 28. Processing machinery, installation of processing machinery. Can we add it back? At a cost ya ngapi? 15, 16. Staff Christmas party iko sawa. Retrenchment costs iko sawa. Legal fees comprised defense against claim for breach of trade agreements. So defense for breach of trade agreements. Successful or unsuccessful? So we assume it was successful, so that we add back what? We add back dash. Sinakuwa allowable. Renewal of Kenyan Association of Manufacturers membership, that is okay. Negotiating a bank loan, can we add back? Negotiating bank loan of how much? 1168. Preparation of employment contracts, na lease agreement iko sawa. Release of liability iko kwa income. Turudi kwa expenses zetu. Turudi kwa expenses. Purchase of trademark. Can we add back? So trademark can purchase na how much? About 8,800, right? Design of website, can we add it back? Website can design how much? 2,400. Directors fees iko sawa, donations charitable iko sawa. Can we add back depreciation? The depreciation expense 3240. Marketing iko sawa, management and professional iko sawa, general legal costs here. Now loan repayment, can you add it back? What is allowed is the interest on loan. Loan repayment affects capital 2,000 gapi. 2,600. Allowance for doubtful debts, examiner is silent for the smart by defect. Specific or general. The doubtful debts, nasema to assume is specific. Na kama ni specific, inakuwa allowance. So we add backwards. Add back dash. Can we add back impairment loss of property? Impairment loss of property 1,500. So 1,500. Then you look at what you're supposed to less. We look at what you're supposed to less. Kwanza na less release of liability. Release of liability pande juu ni ngapi? I think 32,000. 32,000. I always like finishing with additional information yote. Iko nirudi huko juu. Kwa sababu tumedeal na release of liability. Sasa tunapo gari tulinunua in note asset tulibuy in note number 1, we can less the capital allowances. So we less capital allowances. Upon assets that were acquired, note number 1, can we start with factory building? You don't even need to mention which capital allowance it is. Or I went at the right rates. I think 50%. 50%. What is the cost of the factory building? 8,800. The 50% is in the leakage. In the leakage. I think 4,400. 4,400. Warehouse. But then something hapa. Hapo kwa note number 1. Debt. That is offenses. We enjoyed that factory building for how many months? Tulianza kuitumia first April for 9 months. Tunatoa miezi 3, sio? Kwa hivyo hii tuko nayo hapa tunanyoroshwa tunafaa kufanya times 9/12. That is very important. So it's 14,400 times 9 over 12. 10,8. So 10,8. So size from 2020, time is of essence. Time is of essence. So, tulianza kuitumia 1st April, we cannot claim for the whole year. We shall claim for the time that we used it. Because it's always constrained like this. Missing balance at time. So warehouse, I think 10% for warehouse. 10% of 2,800 times 9 over what? Times 9 over 12. So 80 times 9 over 12. To 10. Processing machinery. With 50%. Lakini kulikuwa na installation cost ya processing machinery somewhere. So I'm saying 50% of the processing machinery will cost how much? 16,000. The installation cost yake ni ngapi hapo chini? So somewhere, sindio? 1560. So plus 1560. Then we have to apportion to the 9 months. So 50% of 17,560 times 9 over 12. 6,585. 6,585, very important. Tuko na lorry. So you have the lorry. The lorry. The cost of the lorry is at 500. So that 500 is 25%. But we must apportion to the 9 months, that's 9 over 12. $656.25. After the lorry, we have the drainage system. Drainage system is at 50%. So 50% of 2,600. That's 9 over what? That's 9 over 12. 9? 970. 975. We have saloon car. %5 of 3 million, that is 3,000 unaweka R. That's 9 over 12. $562.5. Ukumbuke hiyo R to stand for restriction. We have new site somewhere. Note number 3. 10% of that. 10% of 820. Hiyo hajatuambia ilianza kutumika 1st April. Kwa hivyo ilikuwa kwa mwaka mzima, that only claim 80 ngapi? 82. Processing machine installation schedule. Now, do you have any other asset there? Any assets in it? And up at the incomes less necessity taxable. Turnover, provision for foreign exchange gain. Can we list that one? Provision for forex gain. The only provision that is taxable is the specific bad debts. Yeah. So provision we add back how much? We less how much? We less 84,000. Gain on sale of motor vehicle, can we less? We're not in the business of buying and selling motor vehicles. Gain yaga. 28,000. Release of liability to Shaitoa. Refund of excise duty, can we remove it? Refund of excise duty amounting to 16,000. Then we can also remove investment income. Which is 24,000. So how much are we adding back? How much are we investing? Seven four. 8.
74888.
And the amount to this? Two or three. 23859. 0.75. So we have our adjusted taxable income. I'm a business income. $300, 398, 632.25. Then we bring in other incomes. Other income, they can see them made up of investment income. Ngoja tuambie ni nini? Make an assumption that things are made easier. So you can even assume they are qualified. So 398, 632.25. Can you get the tax liability? tax liability, ingawaje hajatuuliza, equals to times 30% hivyo. Tax liability 30% of your taxable income. Hi. We can check one more. You're sitting next. Question 4B. That's the August 2022 question 4B. So August 2022 question 4B. Hi. We're there. Tunataka the taxable profit ukiendelea na maswali zao. So let's check it out. Now we are told that page 22, right? Page 21. Now, Packing Limited, a large manufacturing company, has provided you with the following statement of profit or loss for the year 2021. Gross profit with less general expenses, the allowable unless to avoid otherwise. Loan repayment is allowable. It's allowable. Director's fees. Director's fees ni allowable. Allowable. VAT paid. It's allowable. Depreciation. Salaries and wages. Allowable donations to political parties. It's allowable. Interest expense. Interest is allowable still. Allowable.
Which question? Which question?
Page 20, Marianne. Question 4B of August 2022. August 2022, question 4B. Page 20. Great. So installment tax paid will be disallowed. Purely tax. Then we have dividends paid at the allowable. Here to fight fikiria sana. When we pay dividends, after tax or before tax? We pay dividends after tax. Kwa hiyo ni disallowable. Hiyo inamaanisha kuwa dividends cannot affect the profits to be taxed because they come in after you've already taxed. Sasa tukifika hapa Hii ni kama profit before tax. Ukishapata the profit before tax, sio tuna tax. Pata profit after tax. Ukishapata profit after tax, not less dividends. So dividends should not affect our profits before tax. So it is allowable. Repairs and maintenance of the money? Yes, they are. And we have the net profit for the year. On 1st January 2021, Pakim Limited purchased an industrial building from Papa Limited, a contractor, for 200 million. The following details were veiled that comprise the total purchase price for the industrial building. Land. Does land qualify for capital allowance? Land does not qualify for any capital allowance. Does land qualify? Land does not qualify. And remember, why we grant capital allowance as a compensation for the loss in value? Because land does not lose value, it doesn't qualify for any capital. So your land, no capital allowance for it. Demolition of all buildings on sites. So demolition should be added to the cost of the building. Wakati unajenga nyumba na upate kuna zile za kubomoa, ile cost umeenda kubomoa utai-add pamoja kwa the total cost of putting up the house. So demolition, you should be adding the cost of the building. Labor quarters, IBD at the rate of 10%. Factory building, ID 50%. Perimeter wall. Perimeter wall in the fence. Fence and ID. It is obviously, this person, this company, when putting up the perimeter wall, were they thinking of the staff quarters as a factor? Obviously, the factor. So that is among the buildings that are associated with the factor. Ni kama tu boa. Ukisema boa, hata itapply money kwa staff quarters. Staff quarters here on the second. The main reason as they put up the boa to ensure that the factory does not lack water. Wakati unafeel uko na excess water is when you can say, why can't I even serve my staff? Because there is water. Even the perimeter wall, first, the primary reason of putting it up is to protect the factory. Even ID, drainage and sewer system, ID, ID. Now, what we are supposed to do, on story ya demolition, tunafaa tuletee concept ya overhead absorption costs. Overhead absorption cost. That would be a better one, right? Only example. Sorry.
Okay.
So we shall see how to deal with it. Lazima tutabsorb hiyo cost ya demolition kwa hizo asset nyingine ambazo tulijenga. The factory building above houses a warehouse costing 7 million. Warehouse in for IBD. Admin block in for ID. A short in for IBD. IBD. Now, at the same time, it is part of the cost. It is not part of the factory building here. It's not the factory building houses. That those amounts are not included in the cost of the factory building. That they were included to get the tower. Wafula Limited purchased and installed the processing machinery in the factory at a cost of 40 million on 2nd January 2021 and started manufacturing leather products. Processing machinery included workshop machine in ID. Any maintenance, the workshop machinery, and the boilers in ID. So that is another ID. The following additional assets were acquired during the year 2021. On 5th January 2021, computers were acquired on hire purchase at 620,000. Hire purchase interest included was 140,000. So cost of computers is 620. Yeah. Acquired the computers need WTA, 25%. Furniture, is it 10%? WTA. Other machines. Other machinery at our naked is 10%. 10%. On 15th, Pakim bought a pickup of 2250. Is it 25%? Yes, in motor vehicle. Motorcycle is it 25%? Water pump is ID. Delivery trucks, WTA 25% still. 2 saloon cars were purchased at 3.6 million each in April 2021. In October 21, 1 saloon car was involved in an accident and the insurance company paid 2 million as compensation. Tukiuza tunaitoa kwa vitabu. So we're not less. In November 2021, the pickup vehicle was traded in with a new delivery van valued at 3 million. The pickup had a value of 1.6 million at the time of the trade-in. Trade-in is tunanunua nyingine tukiuza nyingine. As we bring in a new one, we sell the old one. So ile yenye unauza toa kwa vitabu, ile yenye unanunua ongeza kwa vitabu. Sawa. So you add whatever you are buying, you less whatever you are selling. Interest expense include hire purchase interest for the computers of 140, except na APA. It is interest on purchase of fixed assets. Interest on overdue loan. Interest on loan hiyo ni allowable, ndio. Ni allowable kama ni overdue. Provision for interest on loan to be obtained to expand the business. It is a provision. Provisions are what? It's allowable. Interest on unpaid tax. It's allowable. It's allowable. Gross profit included anticipated foreign exchange gain of 2 million. Anticipated, has it been realized? Anticipated is realized. Maybe you to enjoy it. And reduction in general bad debts. Decrease in general bad debts. The taxable. General in taxable with all that long information, they need us to prepare the capital allowances. Let's start from there. So capital allowances. So as they're working, to deal with an airport demolition. So as they're working, we need to get the qualifying costs for capital allowances. So half of factory building, industrial building, So on a labor quarters, cost yao ni ngapi? 60,000 sio? So you shall look at it. Alafu baada ya hapo tutaongeza hiyo demolition. Let me put it this way. So hapa tuko na tuongea 60, this is 60,000. We shall add the cost of demolition. So that shall add the cost of demolition to better the total cost. We shall see how to deal with it. One of them is nazo. So you have the labor quarters, land nimeilenga, na demolition pia nimeilenga kwa kutaka kuyasolve hizo cost zingine. So after labor quarters we have the factory. Factory building pesa ngapi? 90,000. Alafu tuko na perimeter wall. Perimeter wall is 5,000. Na pia tuko na drainage system. The drainage system of how much? 13,000, right? What is the total cost of those items? 60 plus 90, that is 150. 150 plus 18. 158. Alafu total cost ya demolition ni ngapi? Total cost ya demolition is 10K. So that by the works of the demolition, our total cost will be 178,000. Now, that concept of absorption, now we are asking ourselves, like now, the demolition cost, let me just demonstrate a pamoja. Demolition cost, ya kwanza in labor quarters. Hapo kwa labor quarters, we're simply asking ourselves, 60,000 divided by 168,000 times the total cost of demolition ambayo ni 10. How much will go to the labor? So the fraction of the labor quarters, total yake ni 60 out of this total. So kwa lugha mwananchi ni vile watu tunajiuliza kuwa if with the total cost of 168,000, our labor cost is 60,000. How much shall we have out of the total cost of 10,000? So we have solved the demolition cost respective assets. So how much will that be for labor quarters? Over 168 is 10,000. Eight five. 35. That 571 point. So 3571. Just make it round it up. Okay. Gender for factory building, it is 19 over 168 and 10,000. 90 over 168 and 10,000 we get 53, 57. 5 over 168 and 10,000. 298. And finally, 13 over 168 is 10,000. Seven, 774. So kwa hivyo total cost hapa tuko na 63,571. Hapa tuko na 95,357. Hapa tuko na 52,98. Hapa tuko na 13,774. I believe ukiadd yote utapata 178,000. Ndio ilikuwa catch kwa hiyo swali. error here. So tupeane the capital allowances hapa. We can start with ID. Nature of what? Nature of assets. We have the qualifying cost. We have the rate. And we have the residue. Carry forward. Let's just say residue carry forward. Oh. Ni mwaka mmoja peke yake. Tuweke tu hapa ID 50% because ni mwaka mmoja peke yake. So after ID, can we have the IBD hapo chini yake? Can have the IBD. IBD for 2021, the same concept. Nature of assets. You have the qualifying cost. IBD, the 10%. Then you can have the residue. Correct forward. Ni mwaka mmoja pekee yake kwa bei moja.
Adjust camera. Yes, we do. Okay.
Then we can have the WTA. The WTA. So WTA, we have class 1, the 25%, and class 2 at 100, 10%. Class 1, 25%, class 2, 10%. So like we have all of them, so that tukipata tunaweka. Kupata asset ya ID weka kwa ID, kupata ID weka kwa ID, kupata WTA weka kwa WTA. And then let's start. Can we start with those ones? Labor quotas. Labor quotas tuweke wapi? Kwa IBD. So enda kwa IBD yako na peana labor quotas. Labor quotas, the cost is how much? 63, 571. 10% inakuwa 53 ngapi? 63, 57. Kubakisha balance ya ngapi? Okay, 0.1. The difference ibaki ngapi?
$57,213.9.
213.9, right? We have factory building. Hiyo ni ya huku. Factory building, the cost is how much? 95, 350 gapi? 357, 50%. 40, 47, 670, 678, 0.5. Part number 47, 678.5. Do you have perimeter wall? Area ID. Perimeter wall, the cost is 52 gapi? 52.98, 50%. And 644, 49. Back in at 649. We have the drainage system. The cost of the drainage system is 13,774, 50%. 60 gapi? 58.87. Back in at 58.87. Atuangalie hizo assets zingine. So note number 1 sorted. Note number 2. The factory building above houses the warehouse. Warehouse ni IBD. The warehouse, cost of warehouse is how much? 7,000, 10% is 700. Bakisha ngapi? 6,900. We have admin block. Administration block, the cost is how much? 27,000. So 10% is 700. Bakisha ngapi? 6,300. We have showroom. Showroom costing how much? Okay, it's in there. So 4,000, 10% is 400. Bakisha ngapi? 3,600. So note number 2 sorted. Note number 3. McCain purchased and installed a processing machinery in the factory at a cost of 40 million. And we have processing machinery for ID. All the items that are used for manufacturing qualify for ID. We buy it at how much? And for your processing machinery, the cost of processing machinery is included. So for hiyo 40, tutoe ngapi? Tutoe 5 na tutoe? Tusimamie, kila asset ijisimamie. So for the 40 minus 11, right? Is it 29? 29,000. 50% equal ngapi? Is it 14,500? 14,500. But hata zile tumezitoa pia zina qualify for capital allowance. For the workshop machine pia ni ya ID. So tumeitoa tu ili isimamie because it's an independent asset. The cost of workshop machine was 5,000. And even boiler pia ina kwa ID. Cost of boiler was how much? 6,000. So 50% kwa nazo hapo na bakisha the remaining 50%. So note number 3 sorted. Note number 4. Note number 4. The following additional assets were acquired during the year. On 5th January, computers were acquired on hire purchase. 10-year WTA. Tutunda kwa WTA sasa. Kuna computer. $620. The higher purchase iko hapo ndani. Hiyo ni class 1. So the 20 class 1. We have furniture. Furniture yenye class. This class 2. Furniture ya ngapi? 720. We have other machines. Other machines class 2, 900 what? 968. On 15, they bought a pickup. So we have the pickup. Na hiyo ni match. So they bought a pickup. So just so they buy pickup on 15th March, bought a pickup at 2250, a motorcycle at 190, and we have water pump. No problem. And by the way, something that I just want to clarify, no stories are for portion. The examiner is not very keen on it. So look how for portion, they're not punished for that. At our level, examiner is not very keen on that. At one level, they are very keen. Like now, our pickup in the bio on 15th March. So we can actually have a portion for only 10 months. Yeah. But how do you portion for half a month? And then you can only remove the January and February. But look at the whole figure. Don't you put the chest back? Is it 2250? Look at the whole figure. Motorcycle. Motorcycle ni how much? It's class 1. Ni motor. Water pump yenda wapi? Water pump yenda kwa ID. So weka water pump kwa ID. Just camera tuone vizuri. So our water pump will cost how much? So 48. The figures are in thousand. Hapa tuna 50% inakuwa 24. Bakisha 24. Delivery trucks. Since delivery trucks 10,000. And immediate 5 million each. Hizo ni commercials, ndio. Just saloon cars for purchase. So we have saloon cars. 3.6 million each. They qualify at how much? That like your eye. Like your eye. 6 million each. Sorry, 3 million each. In November, the pickup vehicle was traded in with the new delivery van. So can we bring in another delivery van? Kuna statement hapo juu tutadinayo. New delivery van ilikuwa pesa ngapi? 3 million. Right. So we less the disposals. Kuna disposal ya kwanza, the delivery van, hiyo trade in. As you buy the new delivery van, you sell the old one. Na hiyo ilikuwa na value ya ngapi? 1.10. The pickup, so not the delivery van, the pickup. Pickup, sorry. Tuliuza pickup, tukanunua delivery van. So tutoe pickup kwa vitabu, na tuweke delivery van. Kuna saloon car pia tuliuza. Ilikuwa involved in accident, so it's no longer there. So pia tuitoe kwa vitabu. Na saloon car inakuanga na kaukora. Wakati uliibai na 3.6 million, but only claimed 3 million. Wakati umeiuza, insurance imekulipa 2 million. You cannot again less the whole figure. Ile kwa tunajiuliza, if at a cost of 3.6 million, I only claimed how much? 3 million. How much will I claim when I receive 2 million? Sawa. So hapa, acha nipeane formula ni acha stress kama tumebit. If you restricted it when buying, you must also restrict it when selling. Ukirestrict ukinunua, lazima urestrict kufanya nini? Ukiuza. Na formula yetu ni very simple. Tunajiuliza, tunasema what is the disposal value over the purchase price? That is the restriction value. Selling price over the cost price, that's the restriction value.
Pardon? Pardon? The formula. Pardon the formula. Hello, unanisikia?
Sema tunamsikia.
Nakwambia nini pardon your formula. The formula.
The disposal of the saloon car.
It's the disposable value.
So the disposal value of the selling price divided by the cost price times the restriction value. How much are you selling that vehicle at? So when you restricted the saloon car while buying, you must also restrict it to excess. So today buying a 3.6 that tumeuza na 2 million. Insurance company compensate ikawa na kusema imenunua na inakulipa that much. Ndio. So therefore hapa kwa saloon car will not put here the 2 million. We shall say we are selling it at 2 million. We had bought it at 3,600. It got 3.6 each. That will be the restriction at how much? 3,000. So how much should we put here? $1,000 and something.
1667.
667.
One. Start with 1.
1667. Great. I think tumedeal na assets zote. Tumedeal na assets zote. So therefore, you add, you get the qualifying costs. So that you let WTA for each year for 2021, and you can have the written down value. After that 1st December 2021. So totally at class 1, totally at class 2. So 10%, you can see 168.8. Hivi nabaki na ngapi? alafu una add ID yote na pia una add IBD yote. It's a total 18 783 793. Hiyo anza kufanya times 0.25 exchange 1057 and the difference 13126. Na hii difference ni ngapi?
19.2.
19.2. The total of ID and the total of ID. I still say that. So, the figure say
77 to 38.
now let me explain something here. What you're going to do after this. Now we have the capital allowance. Hapa, examiner has to get the capital allowance by number 1. Ndio. Kwa sababu imebidi tutengeneze the capital allowance. Kama hangeuliza, then tungeenda na maelezo mengine. Lakini akiuliza, anza na hizo. Because he needs to fit the schedule. Sasa, then after that, when answering part 2, we have the reported net profit of 5165. Then we shall add back the disallowable expenses. Strong hold here. So we shall add back the disallowable expenses. I think the disallowables, the VAT paid, depreciation, donations to political party, impairment tax paid, installment, dividends paid, as the add back. Yeah. For note number 1, note number 2, those are the core assets by. Then note number 3, interest on overdue provision for interest on loans to obtain, you have to add back. There. Interest on unpaid tax, you have to add back. The normal one, so with shingwa. Unaanzia kwa reported profits ambayo tumepewa. Reported profit ni ngapi? Help a neighbor 51 ngapi? 51.65 million. Then start from the 51.65 add back the disallowable expenses. Right? After adding back the disallowable expenses, we less capital allowances. So utaless ID, ifika iko hapa, utaless IBD, ifika iko hapa, utaless WTA, this and this. Unaweka kwa bracket kama working. WTA, this plus this, pata figure utaless. Ndio. Alafu ukishaless hiyo kuna item nyingine hapo less. Do you have some income that is not supposed to be there? in written down value as at the 1st December 2021, as at the end of the year 2021. Hizo showing ile chakula. Gross profit included anticipated foreign exchange of 2 million because it is anticipated in the realized. We shall also less the unrealized foreign exchange gain million, and we shall less the reduction in general bad debts. So that is the place. Alafu tupate the taxable income. Sawa. Alafu ndana nakuuliza explain the tax treatment of tax losses. How do they do tax losses? Just say something. Treatment of tax losses. Treatment of tax losses. We say the tax treatment of tax losses. Then we say a loss from one source. A loss from one source. Sorry. A loss from one source cannot be offset. Cannot be offset by a profit from other sources. A loss from one source cannot be offset by a profit from other sources.
Cannot be what?
A loss from one source cannot be offset. Haiwezi punguzwa. Cannot be offset by a profit from other sources. But it is carried forward. But it is carried forward to be offset against, but it is carried forward to be offset against the profits from the similar source in subsequent years. But it is carried forward to be offset against profits from the similar source in subsequent years. i.e. up to the sixth subsequent year. Mpaka mwaka wa sita. Up to the sixth subsequent year. What am I talking about here? If we shall make a loss from this business, you know, you have the business income, tuko na other income, wanaweza kuwa na royalties, the other income. So from one source, if we make a loss, your loss na iskuma mbele, tungoje next year kama to make profit from the same source. If we make a profit from the same source next year, we recover the loss of last year, ile balance nabaki tutalipia tax. Sawa. Lakini loss ya biashara hatuwezi punguza kwa profit ya rentals. Loss ya biashara hatuwezi punguza kwa profit ya farming. And that's why what tunazileta under other incomes, so that we cannot mix those incomes together. Biashara ijisimamie kivyake, farming income ijisimamie kivyake, rental income ijisimamie kivyake. If any of them makes a loss, it will be not started in the subsequent years. If the adjusted business income is a loss, then we shall call it adjusted business loss. And don't stop there, carried forward. Now your loss I recognize when you come practice. Alafu si hapo chini tunaweka other incomes. So other incomes, maybe tuko na dividends the 20,000. So dividends from the non-qualified, dividends from cooperative societies other than SACCOs. You're gonna farming income, maybe you're gonna royalties. So the total taxable income itakuwa hizo other incomes peke yake, hauta less your loss. Kwa zile loss unaisukuma kwa miaka zifuatazo. Kutoka mwaka zifuatazo au miaka za mbele. Hiyo. Subsequent years. The loss from one source can only be carried forward to offset against profit from similar sources. Any swali kwa Wafula? You can also try one investment, one capital allowance. Iko kwa kila sitting, by the way. April 2022, question 5C. And just write it down. April 2022, question 5C. Page 26, one of our page numbers. So make attempt. Kama tutakuwa sawa, tunaenda kwa PhD. Kama tutakuwa sawa. Nataka tunachoende kwa PhD, tufanye revision ya swali moja hata kwa kila topic. Because when you open the past papers, by now when you open the past papers, any sitting, hata kama uko hapo kwa April, I don't know which sitting you are in. August 2022. Ukiangalia August 2022. Ni vizuri kupima. Nilituma notes za public finance. Na nilipromise kutuma. Getting late, I should send them. Some question one the public finance. But public finance, yes, they are very professional public finance. Now, question 2 inazungumzia question 1 ni public finance yote. Debt manage the summarize 4 functions of the Commission of Revenue Allocation. Highlight 2 objectives of the Public Debt Management Office on Public Finance. Question 2. An accounting officer of a procuring entity may use restricted tendering if any of the provided conditions are satisfied. Still public finance. Outline 6 values and principles of the Constitution and relevant legislation. Public finance. So in public finance, I'm already in 30 marks. So it is also relevant. So question 2 still in VAT, your budget Japania still. Question 3, I think employment income. Employment income. Yes, question 4, I think company, ndio tumekuwa tunashughulika nayo sasa hivi. Capital allowances, ndio. Na business income. Question 5, I think partnership. So kihesabu ni kama tumebakisha VAT. Hata ukienda hiyo following sitting, the April 2022. Question 1 ni public finance. Question 2 part A ni public finance, part 3 ni VAT. Question 3 ni employment income iko hapo. Question 4 ni partnership. Question 5 capital allowances. And that is how it is. Question 1 public finance, question 2 kuna public finance, question 3 kuna employment income, question 4 kuna capital allowance, question 5 kuna company business income. So zile hesabu tumebakisha sasa hivi ni za VAT. So try that capital allowances if it makes sense, well and good, so that God willing tuzungumzie VAT on Wednesday next week. Sasa So we can stop there.